When you think about the physical infrastructure of our world,
Hmm.
um, you probably visualize these massive imposing structures.
Oh, sure.
Like
Yeah.
you picture four-lane concrete highways stretching across the country, right? Or giant steel power lines cutting through the
All right.
mountains.
Or, huge concrete dams holding back millions of gallons of water.
Exactly. You can clearly see them, you interact with them,
Yeah.
without a doubt that they are there just holding society together.
Yeah, they really demand your attention. I mean, they are these monumentally visible markers of human engineering.
But then if you look at the digital infrastructure, the
Yeah.
actual physical hardware running the internet, driving the global economy,
Hmm?
and powering this massive artificial intelligence explosion we are living through, suddenly the most powerful force in the world is completely invisible.
It's wild.
It is. It's a foundation that's hidden right there in your pocket, and now it's quietly taking over these windowless buildings the size of football fields all across the globe.
It is the ultimate stealth expansion. I mean, we are talking about a completely silent engine that you rely on every single day, whether you actually realize it or not.
Welcome to today's deep dive. We are so thrilled you're joining us. Today, our mission is to unpack Arm Holdings Q3 2026 earnings call.
And before you assume we're just going to read through some dry financial ledger of profits and losses, don't worry.
Yeah, let me stop you right there. What we are really looking at with these sources is, well, it's a masterclass in how AI is fundamentally rewiring the physical infrastructure of the internet, our cars, and the devices we touch every day.
Right. And if you're looking at this earnings report, the baseline context you really need to know is that ARM just reported a record $1.24 billion in revenue for the quarter.
Which is huge.
It is.
Yeah.
That makes this their fourth consecutive billion-dollar quarter, but the total top-line revenue is not actually the story here.
Right.
The thing that has the entire tech industry sitting up and taking frantic notes is exactly where that growth is coming from.
Okay, let's unpack this, because the numbers inside that total revenue figure are just wild.
Yeah, they are.
Their royalty revenue hit a record $737 million, which is up 27% year over year.
Right.
But here is the blockbuster statistic, the one that absolutely made me do a double take. Their data center royalty revenue grew over 100% year over year.
Doubled. Just incredible.
And ARM's management expects their data center business to actually surpass mobile and become their largest single business segment within just a few years.
Which is a massive shift.
So, looking at this, we have to bridge a mental gap here. Because we all know ARM is the company inside our cell phones, right?
Sure, the mobile guys.
Yeah, it's the battery-saving architecture that makes sure your phone doesn't die by noon. So how does a mobile chip designer suddenly conquer the massive, power-hungry cloud?
Well, it comes down to a collision between the physics of computation and, honestly, the limits of our power grid.
The power grid.
Yeah. You mentioned battery saving earlier, which is the crucial DNA here. Historically, data centers didn't care much about power efficiency.
They just plugged into the wall.
Exactly. For decades, they just wanted pure brute force speed. They built giant cooling towers, signed massive contracts with utility companies, and operated with essentially unlimited electricity.
Wow.
But the AI boom completely broke that mathematical model. Hyperscalers, so companies like Amazon, Google, Microsoft, they are now desperate for power efficiency because they are literally running into the physical limits of the global electrical grid.
Oh, because they can't just plug in more extension cords.
Right.
I mean, you hear stories about tech companies trying to build data centers right next to nuclear power plants just to guarantee they have enough juice to run these AI models.
And that is not an exaggeration. I mean, they are severely power constrained right now. So you have to ask, who has spent the last 3 decades perfecting the art of getting the absolute maximum amount of compute out of a tiny constrained power envelope? ARM. Their entire architecture was born in the crucible of mobile phones, where efficiency is quite literally life or death for the device.
Right. If it gets too hot or dies, the phone is useless.
Exactly. And now, that same efficiency mandate has scaled up to the cloud. ARM's market share among the top hyperscalers is approaching 50%.
That's huge.
It is. Their Neoverse CPUs, which their chips specifically designed for the data center, have just surpassed 1 billion cores deployed.
1 billion cores. I mean, that is a staggering footprint for something most people have never even seen.
Right.
But I have to push back here for a second, because for the last 3 years, everywhere you look, all we've heard is that GPUs, graphics processing units, are the undisputed kings of AI.
Oh, absolutely.
We see NVIDIA stock going to the moon because of their GPUs. So why are CPUs, central processing units, suddenly becoming the rock stars of the data center again.
What's fascinating here is the evolution of how we are actually using artificial intelligence day to day. We are witnessing this massive industry shift from AI training to AI inference.
Okay, I was reading about this distinction and the sources, and let me see if I have this right.
For it.
Training is essentially like sending the AI to college. You are feeding it the entire internet, teaching it patterns, having it read millions of books simultaneously.
Right.
And that requires brute force, massive parallel processing, which GPUs are perfectly built for.
Exactly.
But inference is what happens after graduation when the AI actually goes to work in the real world and starts doing a specific job.
That is the perfect way to visualize it. And specifically, the job we are asking AI to do is changing right now. We are entering the era of agent-based or agentic AI.
Right, so instead of just a chatbot where I type a question and it spits out a recipe, an agentic AI is something that actually goes out and executes a multi-step task on my behalf.
Yes.
Like if I tell an AI agent, book me a vacation to Rome for under $2,000.
Exactly. Consider everything that agent has to do to accomplish that. It needs to monitor flight prices continuously. It has to check your personal calendar for conflicts.
Right, it needs access to my schedule.
Yeah, and ping a hotel's database through an API, verify your credit card limits, and, maybe send you a text message to confirm a specific layover.
It's a lot of moving parts.
It is. That agent is running constantly in the background. It's always on. It requires coordinating dozens of simultaneous tasks, communicating with entirely different software systems. And this is key. It needs highly predictable latency.
And latency, just so we're all clear, is the delay between asking a computer system to do something and it actually doing it.
Right.
So if my AI agent is trying to snag a flash sale on a flight, high latency means I missed the deal.
Which is totally unacceptable at scale. And it turns out GPUs are fantastic at reading the whole library at once, like you said, but they are not incredibly efficient at that kind of nuanced, always-on, low-latency coordination.
Interesting.
That is exactly what CPUs are built for. They are the project managers keeping all the different plates spinning smoothly around the clock.
So the GPU is the heavy lifter, but the CPU is the executive assistant organizing the heavy lifter's schedule.
Yes, exactly.
And because you might soon have millions of these AI agents running constantly for users all over the world, power efficiency becomes the single most important metric.
Which brings us right back to ARM. I mean, that's why the biggest players are all designing custom ARM-based CPUs right now.
Oh, like who?
Well, AWS just launched their Graviton 5 processor, which doubled their core count to 192 cores.
Wow.
And NVIDIA, the GPU king themselves, their new Vera CPU features 88 ARM-based cores.
No way. Even NVIDIA.
Even NVIDIA. Microsoft introduced the Cobalt 200 with 132 cores. And Google has already migrated over 30,000 applications to the ARM instruction set to run on their custom silicon.
I want to pause on that phrase instruction set for a moment because it gets thrown around a lot in these earnings calls.
Sure.
An instruction set is essentially the fundamental vocabulary a processor uses to understand software.
That's right.
So if software speaks English and the chip only speaks French, nothing works. Google migrating 30,000 applications means they are actively translating their massive software ecosystem to natively speak ARM's language.
Yes.
That is a massive commitment.
It is a fundamental rewiring of the Internet's architecture. They are all scaling up CPU core counts on the ARM instruction set to handle this specific agentic AI workload.
But wait, if everyone is Amazon, Google, Microsoft is building their own custom 192 core processors, that brings us to a huge operational reality.
Yeah.
How is ARM enabling all these different companies to design and build these massive chips so quickly? Because historically, designing a piece of silicon from scratch took years.
It still takes years if you start from a blank whiteboard. But ARM recognized this massive bottleneck in the industry.
Okay.
They aren't just selling the basic architectural blueprints anymore. They have introduced a product called Compute Subsystems, or CSS.
Yes. This was one of the most interesting parts of the deep dive for me. Let me try an analogy here.
Let's hear it.
In the old days, ARM licensing was basically like going to the grocery store. They would sell a tech company the raw flour, the eggs, the sugar, and the baking powder, and they'd say, good luck. We hope you have a great chef who knows how to bake a cake.
Pretty much, yeah.
The tech company had to meticulously mix it all together and figure out the complex chemistry themselves. But now, with compute subsystems, ARM is essentially selling the pre-mixed, heavily tested cake batter.
Right.
The hard chemistry is already done. You just pour it into the pan, maybe add your own custom frosting and put it in the oven.
That analogy holds up incredibly well, actually, especially when you consider why the chemistry of chip design has gotten so difficult lately.
Why is it so hard now?
To understand why companies are desperate for this premixed batter, you have to look at the immense pressure silicon engineers are under right now. The industry is currently moving from 5 nanometer chip manufacturing down to 3 nanometer, and soon 2 nanometer.
And when we say 3 nanometer, we're talking about transistors that are only a few dozen atoms wide. I mean, the scale is almost incomprehensible.
It really is. The physics at that atomic scale are absolutely brutal.
Yeah.
You are dealing with quantum tunneling, where electrons literally leak through solid barriers.
Yeah.
You are dealing with microscopic heat dissipation issues. Because of this, verifying that all the different parts of a chip talk to each other correctly now takes up roughly 70% of the entire engineering time.
70% just on verification.
Just making sure it works. The margin for error isn't just zero, it's catastrophic. If a major tech company misses a product launch window by even 3 months because they found a bug during chip integration, it could cost them billions of dollars in lost market share.
So CSS cuts that integration and verification cycle time in half.
Exactly.
It severely reduces the risk of a faulty design because ARM has already done the heavy lifting of making sure the core components communicate flawlessly.
And because they are taking on that massive engineering burden, ARM charges a higher royalty rate for the CSS batter than they do for the raw ingredients.
Makes sense.
But companies are happily paying it because it guarantees they get their chips to market on time without a multi-billion-dollar failure.
The numbers in the earnings call really back that up too.
Mm-hmm.
They currently have 21 total CSS licenses across 12 different companies, and 5 customers are already shipping physical chips based on CSS.
Yeah, the adoption is fast.
In the mobile world, all top 4 Android vendors are using it. Financially, this is a huge tailwind for ARM. CSS is already making up a mid-teens % of their total royalty revenue, and their CFO noted it could easily reach 50% in the coming years.
It represents a massive structural upgrade to their business model. They are providing significantly more value to their clients, taking on the hardest engineering challenges, and capturing more revenue per single chop as a direct result.
Okay, so we've covered the cloud and the data center, which is clearly booming. But AI is obviously bleeding out of the cloud and into the real world, into our physical spaces.
Right, the edge.
Yeah. The earnings call spent a lot of time on physical AI. We're talking about Rivian using their 3rd-generation autonomy processor, which notably is the first time an ARM v9 architecture is in a production car, and Tesla's Optimus humanoid robot using custom ARM-based processors.
Very cool stuff.
Now, we already know ARM is power efficient, which is great for a battery-powered car or robot. But there has to be a deeper reason why ARM is dominating this physical space, too.
Well, the power efficiency is table stakes, but the real secret weapon here is the unified software ecosystem.
How so?
Think about how a company like Rivian or Tesla develops autonomous driving. They train their AI models on massive server clusters in the cloud.
Okay.
Because those cloud servers are increasingly running on ARM processors, and the car itself is running on an ARM processor, they share the exact same instruction set. They speak the same fundamental vocabulary.
So a developer can write and test the code in the cloud and then push that exact same software down to the car seamlessly.
Yes.
There is no clunky translation layer required to make the car understand the cloud.
Exactly. I mean, when a car is hurtling down a highway at 70 miles per hour and has to decide whether to hit the brakes, you cannot afford the latency of translating software code in real time.
Definitely not.
You need native instantaneous execution. ARM provides that common, predictable foundation from the massive data center all the way down to the tires on the road.
Here's where it gets really interesting, though, because I have to throw a macroeconomic wrench in the gears here.
Okay, bring on.
During the Q&A portion of the earnings call, an analyst brought up a looming issue. MediaTek, which is a massive chip maker, predicted a 15% drop in smartphone volume next year due to memory supply constraints.
Right, the memory shortage.
Basically, a global shortage of memory components means 15% fewer phones might be manufactured globally. Now, if I'm looking at ARM's balance sheet, mobile is still their biggest segment today.
It is.
If their core market is about to shrink by 15%, shouldn't ARM's investors be panicking right now?
It sounds alarming on the surface, I know, but if we connect this to the bigger picture, it actually reveals a brilliant defensive layer in ARM's strategy.
I don't see it.
It's entirely counterintuitive until you look at the behavioral economics of how phone manufacturers operate during a supply chain shortage.
Walk us through that. How do companies like Samsung or Apple behave when they can't get enough parts?
Well, when a major manufacturer has a limited supply of memory chips, they are forced to make a hard choice about which phones to actually assemble.
Okay.
Do they allocate those rare components to build their low-margin budget phones that sell for $200? Or do they put them into their $1,200 premium flagship devices?
Oh, I see.
They will always protect the premium flagship. That is where their profit margin lives.
And let me guess where Arm is making the lion's share of its money.
You see where this is going?
Yeah.
Arm's newest highest margin technology, specifically the V9 architecture and those compute subsystems we just talked about, are entirely concentrated in those premium flagship phones.
Wow.
The budget phones, the ones that won't get built during a shortage, are running older, much cheaper V8 architectures that yield very little royalty revenue for Arm anyway.
That makes total sense.
So when total unit volume drops by 15%, it's the extreme low end of the market taking the hit. The actual mathematical impact to Arm's total bottom line royalties. The CFO estimated it would be a minuscule 1 to 2%.
That is wild. They're essentially insulated from a 15% unit crash because their premium products are considered completely non-negotiable by the device makers.
Exactly.
And a 1 to 2% headwind in mobile is easily swallowed up by the triple-digit growth happening over the data center.
It's a beautifully diversified, highly resilient business model that naturally hedges against physical supply chain shocks.
So the business model is bulletproof against some pretty stiff economic headwinds. Let's pivot to look at the corporate structure behind the scenes and, more importantly, where they're spending their mountain of cash.
Right.
SoftBank famously owns a massive stake in Arm, and during the quarter, SoftBank actually contributed $200 million in licensing revenue to Arm. But there's been this swirling rumor in the market.
Oh yeah, the persistent rumor that SoftBank is going to sell off its Arm shares to fund other separate AI investments. It came up directly in the Q&A session.
It did, and the CEO, Rene Haas, shut it down completely.
It really did.
He quoted Masayoshi Son, the head of SoftBank, directly. He said Masa is not interested in selling one share. He is fiercely long on the company.
Right.
So the ownership structure seemed incredibly stable. But what really caught my eye on the financial sheet wasn't the revenue coming in, but the money going out.
The expenses.
Their own operating expenses, their OPEX, is up 37% year over year. It hit $716 million for the quarter.
It's a huge jump.
Think about this for a second. If your company's making record profits and your business model is highly resilient, why on earth would you aggressively increase your operating expenses by nearly 40%? What exactly are they buying?
They are buying the foundation for the next decade. That $716 million is almost entirely R&D research and development. They are hiring massive amounts of engineering talent. And what they are explicitly building toward is the era of chiplets and complete system on chips, or SoCs.
Let's break those down for a sec. A system on chip is basically taking what used to be multiple different chips on a motherboard, like the CPU, the graphics, the memory controller, and integrating them all into one single, highly efficient piece of silicon.
Right.
But chiplets is a slightly different concept. That's the idea of taking a big monolithic chip and breaking up into specialized smaller blocks that link together.
Right.
Like high-tech Legos.
The Lego analogy is perfect. As manufacturing gets down to that 3-nanometer scale we discussed earlier, printing one giant, flawless monolithic chip is becoming economically unviable.
Why is that?
If there is a single microscopic speck of dust on a giant silicon wafer, the entire massive chip is ruined and has to be thrown away.
Oh, man.
Yeah, the yield rates are terrible, but if you break that design into 10 smaller chiplets, a speck of dust only ruins one tiny Lego block. You save the other 9.
Which saves the manufacturer an absolute fortune.
Exactly.
But the challenge then becomes getting all those individual Legos to snap together and communicate at lightning speed.
Precisely. And Arm is heavily investing that $716 million into designing the architecture and the high-speed interconnects that will make that Lego system work seamlessly.
Wow, okay.
They aren't just designing blueprints for the chips of 2026. That 40% increase in spending is laying the groundwork for the AI hardware we will all be relying on 3 to 5 years down the line.
So they're looking way ahead.
Yes. They're ensuring that when the entire semiconductor industry shifts to chiplets, Arm is still the undisputed foundational blueprint holding all the pieces together.
It's playing chess while everyone else is playing checkers. They are building the board itself.
That's a good way to put it.
So, to wrap this all up, if we look at the overarching theme of this earnings call, Arm's management talked about scaling from milliwatts to gigawatts.
Yeah, great phrase.
They are powering the tiniest sensor running on a watch battery. all the way up to a massive data center drawing gigawatts of power from a nuclear plant. They are actively positioning themselves as the connective tissue, linking the cloud, the edge, and the physical robots walking around our world.
It really is a remarkable unified theory of compute.
Yeah.
Whether it's an autonomous vehicle navigating a busy city street or a hyperscale cloud server processing thousands of complex agentic AI requests per second, they are all speaking the exact same underlying physical language.
And that leads me to a final thought I want to leave you with today. As we move rapidly into this new era, if agentic AI really does become the standard, if we soon have millions of autonomous digital agents constantly humming in the background, communicating across servers, managing your calendar, driving your car, and coordinating global logistics,
Yeah.
and almost every single one of them is running on Arm's architecture, does Arm quietly become the single invisible nervous system of the entire 21st century economy?
It's a huge question.
It is a massive, slightly dizzying concept, and it's definitely something to think about the next time you casually pick up your phone and expect it to just work.
It truly changes how you look at the seemingly simple devices we take for granted every single day.
Absolutely. Thank you so much for joining us on this deep dive. We hope it gave you a fresh perspective on the invisible infrastructure powering our rapidly changing world. Take care and keep exploring.